Does the BOJ have the luxury of time? I mean, inflation is running at 4%. Other central banks have already increased interest rates, tightened monetary policy. They are way behind the curve. Can they take their time in terms of, exiting the current framework that they operate on? And how much higher do you see the yen going from the current level? The yen has appreciated quite a lot against the US dollar. I mean,
they're spending record amounts of money, right, trying to defend yield curve control.
That's right. And yeah, so how much higher?
What an amazing story. I think you asked an important question. Does the BOJ have time? And I think they do. I mean, I think that inflation in Japan is very close to peaking. Look at what the market is expecting later this year. If it to fall back below 2%, I think the IMS forecast is something like that as well. So one I'd say is that inflation, and also with the help of fiscal policy, price pressures, given the strengthening of the yen on a trade-weighted basis, the decline in energy prices, the subsidies that the Japanese government have offered for energy and wheat. I think that all those things point to, I think, a lower rate of inflation takes off some pressure off the BOJ. But to your point, I think that the rising, we've seen a big jump in U.S. rates, a big jump in European rates, and I think that adds to the pressure on the JGBs.
So, Mark, when I take a look at your dollar-yen call, you're looking at dollar-yen at 133, and we're sitting at about 131-ish right now. What does that suggest? That, as you were saying earlier, that Ueda is going to take a really go slow, step-by-step approach to getting out of extraordinarily easy monetary policy? Or is it more because you expect dollar strength? Because, I mean, a lot of people out there recently have become long yen or yen bulls, but not you, sounds like.
So I think that here's what I think typically happens. It's kind of strange in a way, right? That oftentimes you're looking for the yen to be a trending currency, but it's really a range-bound currency. And when it looks like it's trending, it's primarily moving from one range to another. So I think we've entered a new range, something like 129, 135. We haven't been above 135 since the December surprise. I think we're headed that way. But last week we did stop at that 133 area, and we've got to take that out to really indicate a test on that upper end of the range. But also, to your point, I do think that this is primarily a dollar-led move. I think the dollar fell September, October, but it fell for 4 months through January, more or less. And I think that the strength of the U.S. non-farm payroll data, the strength of the ISM services, has basically changed the market sentiment. It has swung market expectations and Fed policy. We've seen I want to say it's something like a 25 basis point jump in the U.S. 2-year note last week alone. And so I think this is what's giving the dollar broader gains, and the yen suffers in the short term because of that.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.